screen.
Yes.
Okay, so thank you everybody for being over here. I will jump in fast presentation, the first minutes over here, and then I'm gonna go over into the playbook. Today I'm gonna explain about what? About raising your edge in trading. And this is basically comes from two things that I have. One is the order flow, so the reading of I would say the level 4, like Fausto was saying, and also the creation of a trading system, so a precise trading strategy that I use. Few things about who I am, so that just want to introduce myself. So I started trading in 1999, and I was working with some of the serious brokers over here in Italy. Actually, this is just like, it's funny to say, but tomorrow I'm going to have a live trading in front of in Italy. Okay, so a live trading in front of a conference. And the same brokers at that time, 20 years ago, they will be
Service,
like
please.
joining me tomorrow. So that is a good thing. So I study everything out there. I've been like learning from different mentors, but at the end I needed to simply have my strategy. And how I did for my strategy, I simply started, guys, to backtest everything the market was giving. So I was like tracking everything out there because I think that the data is one of the most important thing. And for this reason, I started like collecting first of all data and then making a playbook. Why I built the system? Because I was having losses. Okay, because the market is changeable. Because after the market came in 2008 with the rise of the algorithms, the ads funds, and everything, the market was not anymore like simply tradable like it was in the beginning, where you were trading against the market maker, which was a normal human being. All right. After 2008, after Lehman Brothers and everything, market became much more unpredictable. The algorithm became like much faster now, even with the arrival of AI. I think the retail trader will have still like even more difficulty to become successful. So if the machines, okay, if the market is becoming so more difficult now to trade, you have also to step up your curve of learning. And why trade stocks, futures, and options? Well, because I believe in diversification. So I believe, first of all, in investing. I believe that if you keep the money in your bank account or under the bed, your money won't be worth nothing in about 10 years. So inflation, all this stuff. So you have to invest in the correct products, but also there are different products, different assets, so that you can minimize the risk. And according to the, I would say, risk aversion that a person has, you can simply, I would say, find your best choice. Building on edge, what means? Well, what you see over here is an app that I created with my partner. In this app, I backtest, I test, I experiment, and I track the market. Okay, so if you tell me how many times Nvidia on the earnings in the last 14 years or Tesla in the last 5 years had a gap up, and how much it came down from the open? Did it dip and push up to the upside? Did it held the VWAP? And then how much percent is extended from there? Well, with this, I can simply have those stats. So you will see, for example, some of the pattern that you trade, sell the new scenario or buy the dip, or like what the general FOMC do when we have these kind of stats coming out. This is the kind of information that I need to have in the market. All right. So that's the reason why I use this app, which is a software actually, every single day. And we give, each day in screen share. The result came with the build of a trading system, or actually, I would say even better, improving what I was already having. This required a lot of time. One thing that I want to tell is, and this is Theophrastus, is a philosopher of Stoic philosopher. He was saying, time is the most valuable thing a man can spend. And it's so true. So I put all my time in creating this with my partner, he's a coder, okay? So that now I save my time when I trade. Because right away, when I see this morning stocks or futures, okay, let's say Tesla, SST this morning, BON, so some of the biggest gap that we had, I need to know if these stocks had history of fading, history of running, if they were like solid in the past, if they reject the pre-market high, if that break or extend. All of this information for me is like critical, especially to, I would say, project a forecast. Then, of course, you always have to know like the setups, uh, patterns, the order flow, the tape reading. There's no like secret. So what I'm telling you today is something that I've been trading. It's something that, again, if you're in Italy tomorrow, come to see me because I will trade live in front of 300 people. And I will explain now in 2-3 minutes how is based the strategy. Okay, I would say the not all the secret sauce, but the main frame, the blueprint, chart indicator setup. Okay, so for me, the first thing that I learned in trading is that we have a price action and the volume. Those are the first two things. So price action, when I say price action means, like it could be Elliott, could be like the Wyckoff. So higher lows and higher highs, lower lows. When I say volume, I mean also supply and demand, but also the read order flow in the tape. Because we need certain, I would say, metric for confirmation. Chart indicator setup. You can trade off, and I'm trading mostly intraday. You can trade off the 1 minute, the 5 minutes, or the 3 minutes, the 15-minute chart. But over here, I just share something that is like, I would say, common for the majority of traders, which is the 5-minute chart. Okay. So 5-minute chart, let me get over here, is made by 5 major indicators. One is called J lines, which is a 14 and 17 EMA. Then there's J lines 2, which is the medium band. And then there's like another band called the J lines 3, which is the slow band. Now, all of this, I call it J lines, J lines Joseph. That's not difficult to hear, to understand. But you will see that especially the 14 and 17 and the 7289 are going to be like magnets of the market. Often this magnet will be point of intersection with the fibs. Why? 89 is expansion number of Fibonacci. And from there, you can also get the 14. Another thing that I use is the VWAP. Because why? It's not because VWAP is right now the most reliable indicator to trade from, but because you have to know what the other traders are looking at. Okay. And you have to know that if everybody is buying breakouts and everybody's like shorting the VWAP fail and everybody's shorting breakdowns or whatever, you have to know that it's not only me and you that know this information, but it's also all the market, the hedge funds, the institutionals, the algorithms that say simply, I would say, study the market, study our behavior, study our psychology in order to simply trap us. Okay, I don't want to say worse names. Sometimes I curse, so Fausto said, please be polite, and I will. But the point is that you're going to simply get killed if you follow what everybody else is doing. Okay. When Fausto told me to participate today, the first thing I say is that I learned through losses. I lost a ton of my life. I regret so many things in my life, but all these losses, and I still lose sometimes, okay? Maybe 1 month I trade bad and then 3 months good. But what I learn is that every time I have a difficulty, every time that I'm losing, every time that I have like a major, I would say, big loss, I try to learn from that. Because if we don't learn from our losses, if we don't have that particular, I would say, dedication and resilience to improve and understand our losses, we will never get better traders. Okay. And by the way, I'm not here today to make any kind of publicity. I'm here because I have a huge respect for Fausto. And I think we share the same kind of origins because he's Pugliese and is a surname. But this is funny because Pugliese means from Puglia, is a region in Italy, which actually my grandpa comes from. So we are both like with Italian origins, and that's amazing. So getting back to trading over here, I like a lot two type of market scenario, which I believe they are the most common ways to trade and also base your algorithms. Okay, one is the trend following, one is the mean reversal. Now you will see often that the trend following trades, okay, generally, they will have a lower win rate than the mean reversal. But the trend following strategies, they generally have much more R return, so profit factor, versus, okay, the mean reversal. So what does it mean? Maybe you will have a mean reversal strategy that has 80% win rate, but it will be maybe 1 or 2 R, okay? So you risk one to make maybe 1 or 2. And instead, the trend following has generally between a 30 and 50%, okay, win rate. But when you win, you can win even like 8, 10 times, okay, more of what you're risking. In this case today, we're going to talk about one strategy. This strategy is called J-line system. Basically, what you do, you short when the 1 minute J-lines is below the J-lines 2, J-lines 3. You long with the 1 minute J-lines above the J-lines 2, J-lines 3. And you'll see everything aligned. Now let's pass to example, but I can tell these examples are not like, caught the perfect example because I don't want to share the stop losses, okay? That's ridiculous because if you trade one day with me, you'll say, there you have a stop loss you didn't say about it. No, every day there are stop losses, but I've been trading 25 years. I have a room 7 years only. Before I was trading this full time for more than 15 years, and for more than 15 years, I made a living in trading, okay? And also help, I would say, right now, thousands of traders to become successful. This is yes. So the system can work on crypto, but I don't like it. So I only traded Bitcoin. Can work on Forex, but I was never that profitable. In futures, yes. Okay, I started with covered warrants in Italy and futures, European future, FTSE, DAX, FTMIB that I still trade, and also US stocks a lot and Italian stocks. So you can see that the first bar over here is a trend bar breakdown. Okay, we know that it's almost like a beautiful flag play. We can see that the bars are red. So the bars are red when the price is below the red line, okay, the J-line's fast. And you can see the J-line's fast is below the J-line's medium and the J-line's slow. What does it mean? It means that the trend is bearish, mean that I don't have to trade for any kind of reversal, mean I don't have to try to buy the dip, okay? But I need to stay short with the market, okay? Short with the market. So in this case, you enter in the first red bar, then you see the cloud over there, the band 9 and 20 MA. You can simply trail all the way down. And then when we break that J-line's fast upside, you get out of your position. This is a beautiful play, and I will love that the market is simple like this. Everybody will make a lot of money. We're all gonna bring our husband or wives or whoever in the holidays, have like beautiful houses and whatever. But the point is that the market is not always like this. The market is also like choppy, like was, for example, yes, in the first 2 hours this morning. The market is also like trend, like, for example, Tesla was this morning, or SST, if you trade the small caps. So there are different variations of the strategy according to what kind of market you have. This is the overview of the system, okay? So first thing you have to do, imagine that I don't know anything about trading, okay? Always set key levels. What are the key levels? I wrote over there pre-market high, pre-market low, because they're essential. If you trade futures, I will take, every broker has different pre-market high, pre-market lows, okay, according to which broker you have, or according to which chart software you have. I would say that from midnight or from 4 o'clock. So pre-market high, pre-market low, high, weekly low, but also previous day high, previous day low. Those are my 6 major key levels. Then we have also the daily levels, okay? If I tell you 200 on Tesla, or I can tell you 6,000 on ES, I mean, you don't need to be a genius to know that these are the key levels, all right? Major magnets, volatility tools, ATR to size position, and set adaptive stop loss distances, okay? Volatility tools is very important because you want to trade a trend following when there's like volatility and there's liquidity. Because I can tell you this morning, and now ES is breaking out. I can tell you this morning that GME was pushing up. The volume for me was not good to trade it. I can tell you PLTR as a beautiful instead breakout this morning, and trend and the volume was clear. Tesla the same. So I will focus on those stocks that have an increase, okay, versus the previous day or days in terms of volatility. Okay, volatility means range, and liquidity. Okay, so the volume. Trade management, dynamic stop loss based on EMAs, J lines, key daily levels to protect the profits. How many times we are in gain? Maybe we take 3-4 R, we don't take the profit out because we don't have, like, Serge was saying, very nice, and I think the guy is very smart. I want to meet him. And he was saying, for example, you have the first target and then the second. So, and it's true, you have to get paid. Otherwise, what happens? Sometimes you don't have the target, so you know only the entry and the stop loss, and comes back, and now you say, wow, it's a stop loss, or it's like a trailing break even. And that has no sense. Okay? So don't do that. Always have, traders, trust me, always have a kind of stop loss and always have a trailing. Then there are entry triggers. Okay. So these are important because there are patterns actually, and these patterns are, I would say, filtered with bookmap. Okay. So with the order flow and setup conditions. Let's go to the next, because I need to show you this so that you understand. Let's go into this. This, guys, is the short scenario. Okay. We've been talking about before. Two main things that you must know. So if I'm looking to enter in the market and the market is still inside the previous trading range, okay? I'm not looking to trade anything there, or at least I'm testing maybe the market with a starter, with a feeler. But the best position come if we are outside the previous trading range or near the high or the low of the previous trading range, because that is the zone or the zones where you can have actually the possibility to have a good trade coming. The entry timing, okay, let's say we're looking for a pattern, could be a bearish candlestick pattern, bear flags, bull flags for the long, breaks of micro crop tens, order flow, wall of sellers. So you will see something on bookmap, and then trail with the 90 MA, trail with the J-lines, trail with key level. Variation, the lower win probability. For example, if I'm looking to short, okay, and on the short side, I'm going against to the VWAP, or I'm going against to a big daily support, well, it's better that I wait that we breach that level before taking a trade. So I will enter, for example, in a pullback. What to avoid? Range trading, okay? Because range trading, you will trade it when you trade mean reversal. Today we're talking about trend following, and low volume setups. Because when you have trend following, you cannot simply trade without volume. That's the error that the majority of newbies do. And they see the pattern, they see a bull flag, they see a cup pattern, they think, wow, this is a beautiful trade. In reality, if you don't have volume, you can have the best bull flag, the best cup pattern, the best pullback of your life. But if there's no volume, you cannot simply trade it. Let's move on. This is the setup that I want to go over, okay? So the one we saw before. In this case, now you can understand. We have a breakdown on the trend bar of the flag. You have the 9 and 20 MA like it's holding all the way down. You're trailing with the J-lines fast, but you're still like in a short, I would say, scenario, because there's the J-lines 1, below J-lines 3, below J-lines 4, 5. Okay, so J-lines fast, below J-lines mediums, below J-lines slow. These are all like bands. This is an example on NVIDIA. This is an example that we had in pre-market. So you can see the support of the previous day. In this case, you already see that from 7 o'clock, all right? So from 7 o'clock, the pre-market over here is having a breakdown exactly over here. So that's already for me a great, okay, spot where start taking a feeler, even if it's pre-market. And then 8:30, we have an A plus setup. Okay, 8:30, remember, it's 1 hour before the open. Why? Because often the market seems right now, in these last weeks, that is having much more liquidity. Okay, so with all the, I would say, the thing of the tariffs and everything, we have so much more liquidity. So these are perfect pops. This is a setup that we see almost every day. It's a moneymaker setup. And when I see this play over here, often I will have this big rejection. This level over here that I'm tracing over here, the marking, is going to be with a big heat map. And then bear flag all the way down, all the way down, all the way down. And we're going to have actually sometimes what is like a capitulation over here. Okay, this is the open 9:30, but it's also a fake breakdown. It's a liquidity trap. It's a capitulation, 930, and then the price goes up. So you can see again that we're shorting the market. We are trend following. The J-Lance 1 is below the J-Lance 3 minutes, below the J-Lance 5 minutes. The market is going all the way down, okay? And we're taking our trade. Then at the open, we have this fake breakdown. This is a liquidity trap that we see. So until we are in this zone, I don't want to trade. Once the strategy over here, the system is turning into blue, well, we can start looking to buy over here dips and then looking for an uptrend, okay? Essentially, if you look in NVIDIA this morning, if you look at this NVIDIA, but you look also NVIDIA this morning, if you look at Tesla this morning, they made the same exact thing. This is an example from 3 weeks ago. Well, this morning is exactly the same. If you have questions in the meantime, feel free to reach out because I'm happy to help. This is, okay, Google. So Google today also gave an A+ setup on the long side. This is an A+ setup on the short side. So we're talking, as I said, of liquidity traps and then trend following. This is another pop. You can see over here that we have the fake breakout of this level. This is the pre-market high. And then we get into this level down here, okay, which is a pre-market support, pre-market low, this red line. We break it at the open. This is 930. So if you're fast, you can take that. But also, I can tell you that I generally tend to wait the first 10, 15 minutes out of the gate because I need to see the market, what it's doing. So the market is often full of algos at the gate. They make to trap. There's a lot of liquidity. They're like big hands, both sides. So that level over there for me is not really the best play to trade it. Okay. So I will be waiting often for a play that is not at the gate. Okay. So have patience. You don't have always to trade at the gate. Have patience. Okay. That's the first thing. The second thing over here is that you have to look for a pullback. This is your pullback. Okay. We see over here the shooting star. Shooting star, the system is all red. So you can see that we're below the band. Yes. The next bar becomes my A+ setup. Okay. So if you didn't short it open, you will enter over here in the pullback. You place the stop just above the J lines up here. And then you're looking for this unwind. Okay. And again, you will need to have targets. So one of the key rules and that I use is that if I'm risking one, at least on these trades, I want 3.5, 4R. In this market, I'm going to stay with almost 4R every single trade. Okay. So the system has a high win rate. And even there, if they ask you, give me a win rate at your system. Oh, well, depends from first of all, the stock that you're trading, the asset that you're trading, because it could be futures. It depends from, if it's long or short, depends from the scenario in the market. Because if I tell you, so that's the reason why you have to be smart. If they tell you, oh, the system has 60% win rate, okay, 2020 was everything bullish in 2024, but 2025 or 2000, for example, 19 or 2022. So every single year is different. Okay. So you have to find a metric correlated to that kind of market scenario. And that's your short play. Even here, we go down, we write all this with the J lines. Okay. And you stay in for all this move. One thing that I will often call when I'm trading. So these pullbacks, these zones over here where you see another short setup forming around 162 and 60, and then place a stop loss. Because if we have a big trend to the downside or to the upside, look for those pullbacks because those pullbacks are money makers. So if we have enough liquidity, if we have enough volatility, that is your short play on a trendline break. Or if you have bookmap, you'll see key levels over here of liquidity where you can simply short, almost pinpoint the entry. Sometimes, and Fausto, for example, when he shows you bookmap, sometimes you'll have entries on NVIDIA where you risk maybe 50 cents, 60 cents, and it's incredible, okay? Or maybe even less, 20, 30 cents. Because you have certain levels of liquidity where you have, for example, wall of sellers, and you simply short before that liquidity or as soon as we reject from that liquidity. So that liquidity becomes your risk. Another example. So this is KIDZ. Okay, we're talking about a small cap. We're talking about also stock that in these days is really moving so much. There's a ton of attention on KIDZ. It's called class over holding over here. This stock has a lot of range. So in a day, it can move even 30, 40, or even 50%. We can just see over here from almost 11, went down to 650. Okay, so lost like between 40 and 50%. I think that they even filled more. But over here, I want to show you what happens when during the morning you have like an uptrend. Okay, so everybody over here is bullish. And in this case, you don't have to short the market. You're going to short the market over here. You're going to try to get the top, and you're going to simply get killed. Wait that the market shows you that we have that reversal. So you start looking for the price shifting below a trend line. You can see this black line over here. Once we shift below, it's not, oh, I'm shorting over here the market, because that happens like this. You cannot simply short the market because we have a breakdown. How many times you shorted the market because you had a trend line break, and how many times you simply got killed, right? So you can trace many times. And I tell you because I know that as traders do. I mentor traders every single day. This is a trend line. Then you can make a trend line. Maybe you add another trend line and so on. And many times you enter in the breakdown and again goes back up. Remember, the market, the algorithms that are in the market are doing this on purpose to trap you and then squeeze you up, or vice versa for the downside, okay, with fake breakouts. So it's not the simple market of 20 years ago. Market change, adapt. This is that moment the market shifts, the moment that we have a clear trend change. And that's the moment that I like to enter. The same strategy, I use it for the swing. The same strategy, I use it on an hourly chart. The same strategy I use for daily charts. This is over here my stop loss. This is my trend break, and that's where I want to get in. And you can see each bar is making lower highs, lower lows. So means good level over here of, I would say, of selling off this 840. Another thing is the follow through. And these follow through often are really the, I call the stair step down pattern that you will see with order flow, where you will see the order flow. So where you will see the level 4 that is doing actually like this, okay, like this. So imagine that you see the tape, okay, you see the level 2 in the times and sale, they're doing like this. So you see it visually. Visually, it tells you that we're going down. Visually, it tells you that over here we have a huge amount of sell-off. Let's move to long scenarios, because right now we spoke about short scenarios. And why we spoke about short scenarios? Well, yesterday we had the proof. Market dumped, so we had the data, and I want traders to be prepared for the possible, scenario. You're still not on a long-term bearish in the market, but this market, for this market, you have to be ready to everything, because this market is not only depending on your technical analysis. If you think about that, good luck. This market is depending right now on tariffs, on macroeconomic aspects. We use technical analysis. We use like our trading strategies to have an edge against the market. But the market is not that me and you decide it. Nobody decides the market. The market decides itself. And the market now is based on news and macroeconomics. Okay, that's the first thing. The second thing is, if you want to trade, don't only look at your strategy, but always be informed what's happening in the market. Open an X account looking at what Trump and Elon Musk tweet. Open an account to see, or use, for example, any other kind of news to see what, I would say, China is putting out every single day, Europe is saying every single day, because all of these news that we have are simply manipulating aware or not the market. Long scenarios. So we said that in order to trade long, we have the J-Lance 1, sorry, short, J-Lance 1 below the J-Lance 3, below the J-Lance 5. Okay, over here I call it the J-Lance 1, 2, and 3 is the same. So 1 above 3 above 5. You're looking for a stock or a future that is above the previous trading range or near the previous trading day session high. We are looking for a stock or a future that is above the hourly J lines. Actually, today, all were like tested. Yes, NQ, RTY, SPY, Qs, Tesla, Nvidia, Amazon, Apple, every one of these dipped on the over the hourly J lines. Entry timing. Before we were looking for bearish patterns, now we're looking for bullish patterns. So bullish candlestick patterns, bull flags, break of microtrend, and reclaim order flow wall of buyers. Trade management. Something that I really like is the use of the 90 MA, especially if you're trading with the 9 minutes, sorry, with the 5 minute chart. The 90 MA has a very, very important over here rule. You're looking for higher lows, you're looking for J lines, you're looking for key daily levels. Variations, as we said, do not trade, or you know that is much riskier trading against the VWAP or against a key daily level. Avoid range trading, okay? And low volume setups. As we said before, without liquidity, you cannot simply trade. Let's look at some of the plays that we had. These are plays that we actually traded in the room. So what I do is I make a watch list. I trade, a screen share I traded, and I comment looking at my screen share, what happened. So it's not that I'm trading discretionary. I'm trading a strategy, a system where you can simply know the rules. You can see how I do it, and you can actually do it on your end. I think that in order to be reliable and successful, you have to know exactly what your mentor is doing. This is an example on Tesla, okay? Happened this month. We know Tesla that in the first few minutes out of the gate, often it goes up and down, up and down. And a lot of traders get caught trying to trade it. So the first thing that happens 9:30, we have what we call over here a shooting star or doji, okay? A shooting star. This is a candle of indecision. So if you tell me, I don't know, if I see this chart over here and I see the candle, I have a 50-50. But how I'm lucky, probably I will have like 30-70 down right. So I don't know how to trade it, and I have to wait. The system is telling me over here potential long, but it's an indication. And then it tells me long it. But still, sometimes I know that I need to have something more, like the order flow. The third bar gets to the previous day resistance, and it forms another shooting star. You see this little wick? So this little wick means that we have sellers at the top, and the wick, okay, compresses the body. The body gets very narrow, and that means indecision in the market. The next bar either is another doji. It's like a small shooting star. So when we have generally a shooting star over here at the top of a trend, we expect this to go down. And what happens? It goes down. Now I will reveal one of the setups today and go do it after. Okay, don't take what I'm saying for granted. Get informed, experiment, study. I tell you this, go check 5 stocks, Google PLTR, Tesla, yes, QSpy. Today I had, the system had 5 big wins, okay? Using the same setup I'm teaching right now on the 3 and the 5 minute chart. You can use even the 15 minutes. But if you look at the 3 and 5 minutes, it's exactly the same pattern with really no difference than how. So you will see over here that the price compresses, okay, here. This is a compression of the liquidity. So it's what we call often a pennant, what we call often a flag, or it could be a wedge, okay? So you can see the price when it's pulling back over here into the J lines. J lines are blue. This is like getting over here less volume. And then we have this little burst in volume. The system alerts long. And over here is like my first start of the play. The confirmation is on this bar. And this bar tells me that the system is confirming with all this volume. You can see all this bar. This bar is almost no red at all. It means that the majority of the participants in the move of this moment are buyers. That is a confirmation. That's my load the boat scenario. That's my go all in. I place the stop loss, which is the most important thing. And the next most important thing for me is to reach to the first target. Okay. First target that I generally look for, as I said, two major things. One is if I'm looking for an entry with, let's say, 50 cents risk, I'm looking for a $2 generally profit. So I'm looking in this market for 3.5, 4 hour return. I risk one to have at least four. Okay. At least with 1/3 or half position. But until these candles stay blue, I'm not selling. And that's the first candle out here. Okay, so this trade went like, I think 8 hours, something like that, altogether. So over here, I'm getting out 1/3. And then you can see that the bands are still blue. I can still hold over here. I can actually re-enter. This is another A plus setup. Micro consolidation. What happens in micro consolidation, like we said before, volume, okay, gets narrow over here. There's a compression of volume, then a burst in volume. The majority of this candle over here is blue again, and I can trade. One thing to tell you. Personally, if I take this trade, I'm only gonna re-add what I covered before, what I sold before, because it's also lunchtime. And the more we go into the lunchtime, the more you go into the territory where the volume tends to decrease. So the liquidity that we expect in the market, okay, is not gonna be like we had in the first 30, 45 minutes. And then up here, we break the J lines and you get out. Okay, so it's very simple. So imagine that you have a first push, you have a dip. The dip has to be a compression of the volume, and then there's the burst in volume, and the price has to stay with the J lines. And you have to have this. The system over here is automated. Okay, so this is a bot. It tells me to enter. I enter and I follow what it tells me, but always knowing that I'm behind the screen and I can manage the trade as I think is the best in that momentum, in the moment. Because it happens, for example, that I'm long, president or whoever comes out, you know what, guys, we're gonna make tariffs to China to 200%. Boom, market goes down like 200 points or whatever. Okay, so you have to be ready, and that's the reason why I still think that the human being behind the screen is very important. Okay, AI is still not there. It's still not there, but it will get there. This is PONY. So if you trade small caps, something that I can tell you the truth, I found at the beginning very hard to trade, not because the I found it very hard to trade them because the manipulation that are behind small caps is very different than trading futures from where it came and trading European equities. Manipulation that we have in small caps is that high that often these small caps can print 200-300 million a day or even 500 million in a day for a $5 stock. The stock can go up 500% in 3 hours and lose 80% of what it made in 1 hour. So that I tell you how I would say itchy they can be, but also very remunerative. Okay, so how to trade them? First of all, you have to track them. You have to start very small, make your account, take 100, 200 shares to practice. I don't suggest to go in demo because everybody in demo is a super king. When you start trading live, the emotion play a bad role. So this is the first bar. As I told you before, the first bar is always the bar that they simply trap you. And again, you could see one thing, Doji shooting star. So I don't know what the market over here is going to tell me. But when I see this bar dipping, okay, I then start looking for a potential long position, risking the J lines over here. I also have a bull flag. I have another bull flag. So each of these bull flag is a potential add to my position. Now I show you how they trap over here retailers because, oh, sorry. Because if we see over here, this bar, they made it on purpose to create a fake breakdown. Okay, this is another shooting star is not really like this. It's a doji. Okay, so we have a wick to the downside. This is what? This is to invite traders to start shorting because we have a breakdown of support and they do it on purpose. And this is also a way to stop out the long traders, the bull traders. Okay, so it's a clear the book. Okay, it's a liquidity trap. And then we start having over here our trend line break. So you can start adding. This is another setup that we had this morning, I think, in 5, 6 stocks. You can add to the position, add to the position, add to the position. If you look PLTR this morning like this, is exactly the same. And then you can write these trades. So small caps that do the same thing that Tony did, we had today SST, so go check ASST. We had, for example, EDBL for 2 days in a row. We had SYTA. SYTA, I think, went up like 400% or maybe more. So the opportunity you have them. How to spot these? Well, there are some criteria, but I would say that liquidity already and gap percentage is one of the most important things. Amazon, okay? Amazon is a good stock to trade. I like to trade options when you trade Amazon. Stay when you trade options with a very small spread. I like to trade according to underlying stock. I always trade like that. I was trading cover warrants when I was 19 years old, 1999. And yes, 1999, guys. I'm 43 right now. So if you trade options and you day trade options or you scalp options, all right, and you have spread, the spread will kill you. If you trade options instead with a very low spread, let's say 10 cents, 15 the most, then you can simply, and it has to be very liquid, okay? Then it can simply be a money maker. Sometimes the options could be on Tesla on a big day, could go 300 or 400%, maybe on the Lotto day, which is generally Friday. I generally trade weekly, so the expiration the same week or the week after. But remember, these are very, very, yes, they can make you earn a lot in a very short time, but also they're very risky. Okay, so that you know why to trade option, because Amazon, it costs you for 1,000 share $187,000. You want to make the same percentage. Maybe you take like $5,000 of Amazon in options. Okay, just making the comparison. And over here we have now a trade. Okay, so you can see the market is already all blue. This is the open bar, and you can see that we have F buyers, F sellers. Over here, we have the majority of these are sellers. And then over here, we start having our bull flag. What happened? Our bar over here of entry is the majority of the bar. You can see 80 or 90% of this bar is blue. What does it mean, blue? It means that we have like actually buyers. So you enter the trade here or the next bar. You place your stop loss over here, relative low. And then you can simply look to trail. This is a setup that is a stock, is an example that didn't really did great. Came over here a couple of bucks. We had another dip over here. The system alerting you to long more, came up. There was some volume divergence, then it fails, so you get out. So it's a small win. But I wanted to share with you also, because we have something that I believe the majority of you knows or should know, that there's the volume divergence. Volume divergence is a way to often spot reversal plays, okay? So you will see higher highs on the stock, creating another divergence with the volume. So you will see, for example, lower highs, okay, or lower lows, but actually lower highs on the volume over here. So there's divergence. This is going up and this is going down. What does it mean? It means that in the second over here top, we have less volume, okay? So it means that it is getting exhausted. This is how to spot. Case study and trade examples. All right, so this is a real trade that actually one of my traders took. So you can see a small cap, what is. This is the 7th of May. ASST that was in play today. So today, imagine ASST was at $12, okay? But you can see over here that in 35 minutes out of the gate, the stock went from 3.5 till 5.50, okay? So basically 1,000 shares, $3,500. Of course, you scale out, okay? But at least this is $1,000, okay? So you make like almost 30% of your money in about 40 minutes of work. Now, the dip came into the J lines. The trader scaled out. Another cup pattern over here. So remember those cup patterns, the contraction of the volume. Again, burst in the volume over here, another contraction over here, the volume, burst in the volume over here, and then a push and exhaustion. So per market session, determine first of all the key setup, the key support resistance. Look for confluence, daily and key levels, candlestick, and DOM order flow. Always define a risk in advance, strong pre-market, enter on cap with volume, result 1 to 6R. Okay, so you risk 1, in this case it pays 6, and not always that you will get paid 6, but in a case you got paid 6. Let's see another example on futures. Okay, this is another student, another trader. He's actually trading pretty good. He's from Dubai. I met him. He became, I would say, expert in trading, yes, and NQ with 2 setups only. Okay, everything that he does is trading 2 setups. This is our early pre-market session, so before 9:30. Over here, what I want to share with you is that the price goes into these 2 levels over here of the gray. These gray are the J-lines, okay? So in this case, you're looking at the J-lines exactly as we said before. We have a bear flag, that's your entry. You scale out the partial, you re-add more, you scale out the partial, you scale out the partial, and that's over here how you take your 100 points per contract. Let's look another stock. This stock, guys, this is something that I trade. I made a video on this. I share everything that day, okay, on the stock. This stock, KTTA, for who knows it, is one of the hardest stock to trade for the manipulation that you can have. So there was a lot of study by my side on this, and there was a lot of I would say, learning from this trade. Over here, I lost 4 figures on this trade. This was around 9:35. I made also a video, recorded, I will share my broker, my screen and everything. I lost 4 figure, a big 4 figure, because I sized over here and I shorted into the J lines. And I will tell Jay, you said that you don't short into the J lines, you will go long. Exactly. You do errors because I'm not an algorithm. So what happened over here, I longed it after, sorry, I shorted, I stopped, I re-shorted over here, and then the market was still not fading, and the volume was pushing big. And then I started saying, but this is the cup pattern that I always saying to take with the J lines, okay? The same example we saw before. So when you use like, I have this stream deck, I have Razor, I have 2 stream deck and 1 Razor, okay? So I put hotkey for reverse the position. So over here with the short, it didn't fail. You see this wick to downside didn't fail. I got long, I loaded, started skilling out, skilling out, skilling out, skilling out a little bit more. Over here, you can see this little inside bar. I missed the entry, so I wanted to add. I scale out more, I re-added, add a little bit more, scale out, re-added on the dip, scale out, bought more, out everything. Lost 4 figures, close of 5 figures. So by saying one thing, often you will start your day bad. Be very smart and be with patience because you have to be really with nerves of steel when you're trading stocks, especially intraday. Day trading has a different type of anxiety. And I did a lot of research even with doctors about anxiety. I suffered by panic attacks and I had, I think, every symptom possible in trading. This is trading since 1999. So I did a lot of research with neurologists and everything, how you can get better, how you can do mindful exercises, how you can do like meditation and everything of this. I spent years and a lot of money doing this. And I can tell you one thing, that you have to try to leave the emotions, and there are some techniques out of the game. It's not always possible. We're not always the same. Everybody has his problems. But when you trade, you have to try to get into another station. Okay. It's just like when you, I would say, Joe Dispenza says the quantum real and all this, right? Actually, you have to elevate yourself with vibration in order that you don't feel all this when you trade. So you're not looking, oh, I'm making 4 figures, I'm losing 5 figures. No, your point has to be just like a computer, like a robot, like a bot. The more you can be like that when you trade, the more you, first of all, can become, decide better, and also last because it's very easy to trade a couple of years and get retired. It's very hard to trade for a lifetime, like Fausto, for example, and still be successful and really on the pedal of the gas. Personally, I'm getting older. I release the pedal on the gas and I mentor more traders right now because that's really what satisfies me. I did my trading, so I'm just like trading smaller. Few things and about this common mistakes we just explained, but I want to focus 1 second on psychological errors. FOMO, okay, it's very common to use FOMO like, hey, what day is this? Everybody's FOMO. Well, there are techniques to manage your FOMO. Okay. For example, one of the most easy techniques that you can do is actually take a feeler. Let's say you trade Tesla. Let's say you trade NQ. Okay. Maybe you trade M and NQ and you start with 1 or 2 micro contracts. Maybe you trade Tesla, you start trading with 10 shares, 5 shares. Okay. And maybe your usual is 500 shares, 1,000 shares. Trade really like 5, 10, 50 shares, like 1/10 of it. You trade in small caps, maybe you trade 10,000 shares. Okay. Start with 100, 200 shares because often you will be early in the trade. Especially look just before, like, the average that I did that I lost 4 figures. Because I enter right away and I press right away the size. Okay. And even if I lost only 30 cents on the chart, that was a big loss in terms of P&L for me. So that is the first thing. Have a hotkey. Really, I call the super hotkey, which one is for futures on Ninja, one is for stocks, where I have like 10 shares, another one is like 2 micro contracts just to tell you the way to do it. Revenge trading is very important to work with a team. So when you work with a team, when you share ideas with a trader, with a mentor, you can simply bypass all of this and cure it. Okay. If I'm sick and I go to the doctor, in Italy we do like this, hopefully not, but it's not like going to cure all the body. The doctor will do an anamnesis and look where I'm sick, and he will try to simply fix the thing where I'm sick. Okay. So that is an important thing. So you have to have a report card. You have to work with a mentor because in that case, you will see where you are lacking, what you have to improve, and a mentor can see you from outside. I tell you this, uh, many of the coaches that we had, let's say the coach of LeBron James or the coach of Michael Jordan. I mean, they became successful because their athletes, Jordan, LeBron James, or in other sports, or like even Sinner, the number one in tennis. I like tennis. Sinner is Italian and blah, blah, blah. So Fausto will be happy probably. So they are amazing athletes, the best in the world, but they're coaches who are like, never like super athletes, but they were able to bring these traders to the top level. Why a mentor is important? Because it helps you to see things from outside and it stays with you, showing you the path to do and working with you every single day. Okay. It's just like you can never be a good football player, a good soccer player, a good tennis player if you don't have a great coach. Okay. In the sense that he inspires you and he pushes you to do better. Over leveraging. It's an error that I did and I still do. What it means that sometimes I oversize, and I know that a lot of you can oversize. So oversizing when you have uh, a stock that is working in your favor, a future is working in your favor is great. But oversizing when things are going bad, that means adding to a losing position. So never do it. That's the reason why setting a max dollar risk with a broker for the day is something that saves you in the long run. So I think over here I finished. I just want to say that we're giving for today for the Fausto Pugliese and Cyber Trading University seminar, Unlock 50. That's the code, JTrader code, registered chatroom yearly membership, so that you can try 2 weeks in the room for $50. See that what we're trading and what we're saying is not fluff. So you see behind the scenes, or you can come to trade with me. Last year I had 140 traders over here, group of 5, 6, 10 people. I'm building an academy where I invite also Fausto when it'll be ready in 1.5 years for 200 traders. Okay, an academy of trading for 200 traders. We'll have like 25 trading stations. It's going to be the best thing you will see in Italy and maybe in Europe. And that is $50 for 2 weeks. And then you get the room for 50% off for the first year. Fausto, you're still over here, buddy, or you went to eat?
No, I went to eat. I got back. I'm good. I'm not like you. I wish I was eating in your neck of the woods, though. Had some nice Italian supersad, a nice little prosciutto. All good.
Yeah, I wish. I'm doing the carnivore right now. So there's the prosciutto, actually there is, but there's not too many carbs out there. Just like meat and, some proteins.
That's awesome. But no, yeah, listen, thanks for being here. I know a lot of people learn a lot. I mean, listen, I know you trade very similar to the way I trade a lot as a day trader and you same platform, but looks great. Appreciate it. Thanks for being here.
Thank you
But
very much.
and make sure you hit me up when you're back in town.
Absolutely. Thank you very much, Fausto. Thank you, everybody. Good
No
luck.
problem. Thanks for being here. All right. So let me